as they say. It's great to be here speaking at Google Think again. I wanted to talk to you today about the future. That's what we do at Google Think, right? But I wanted to take a different approach to this. That is, when we normally have these discussions about the future, we make these predictions. But, we've been making predictions about the future for about as long as time has existed, okay? And sometimes what we don't do is we don't go back and look at the predictions we've made in the past to see whether they were correct. So if we take what's happening at Google right now, there's a lot of interesting things happening in Google. We're talking a lot about self-driving cars as an example. Now, this is going to be pretty cool, self-driving cars. But one of the things we probably haven't anticipated is not actually just how the car is going to work, but how this is going to change our behavior, how we're going to adapt to a world where we no longer have to drive a car. What are we going to do in the car? Are we going to update our Facebook status and watch movies? Probably, right? Or maybe work. So part of the predictions of the future, where sometimes we make mistakes or we come short, is we don't anticipate some of the behavioral changes that come out of that. So this is a very interesting area to look at. Certainly interests me. Now, of late, there's been some interesting changes, some interesting disruptions. One of those is Uber, and I'm sure you guys have heard of Uber. These are some protests occurring in Milano, in Italy. We've had protests around the world, in London, in Barcelona. All over the world, people have been protesting, mainly taxi drivers protesting this. They were protesting in London, and it was very, very interesting. The day they had a taxi strike for Uber in London, Uber had a 700% increase in downloads of their app. I don't think that's what Uber, the London cabbies, intended when they had the taxi strike. But you see, the taxi drivers in London, they thought Uber was about, or they thought taxis was about getting from point A to point B. But Uber taught us that this experience that they built around the mobile, around the app, was something different. It was the experience of Uber that changed it. Now, this is not just about getting from point A to point B. There's a lot of nuances here. If you're trying to wait for a taxi, and you've booked a taxi and the taxi's running late, especially in Sao Paulo with the traffic, you're sitting there, you're waiting, you're getting anxious. But if you've got your phone and you can pull it out and see where the taxi is, the stress level goes down. You're relaxing. You now know the car is on the way. The uncertainty disappears. So this is part of the experience that Uber really differentiated on. The other element, of course, is the payment. There's no swipe, there's no tap. You just get out of the car and pay. Now, it's interesting. Back in 2005, Microsoft did this video on the future of banking. And embedded in this was a payment scenario getting out of a taxi. So back in 2005, Microsoft predicted this scenario where we would pay with our phone. What they didn't predict was that the disruption of the smartphone would disrupt taxi business itself. They didn't see that coming. They saw the payment innovation coming, but they didn't see disruption of taxis. So how much of this, when we predict the future, how many of these changes do we see coming, but how many of them do we miss? That's really interesting thing to look at. So when we look back at these predictions that we made in the past, this is from a concept phone from around 2005. And you may have seen Nokia Morph and other phones that they put out there. We thought that smartphones of the future would be like mini computers that we would carry around with us. So the focus was on that functionality of these devices. And we weren't wrong. We carry around extremely powerful computers in our pockets these days. In fact, back in 1985, Bank of America had 7 IBM 3033 mainframes, which did about 40 gigaflops of processing speed for Bank of America in their San Francisco data center. Today, in the smartphones that we carry around, the most powerful smartphones we have, with the Snapdragon 805 processors and the Samsung quad-core processors, they're 30 times more powerful than that stack of technology that Bank of America had just in 1985. That's incredible. So we are carrying around these incredibly powerful supercomputers in our pocket. What do we do with these incredibly powerful supercomputers? Well, we play Flappy Bird and Angry Bird and update our Facebook status, right? So this is a behavior that we didn't see coming. We thought, what did we think we would be doing with these devices? Well, we thought we'd be, sharing, not necessarily sharing content, but consuming content. We'd be listening to music, watching movies, and then if we were late, we remember we forgot our wife's the anniversary, and we have to order our wife some flowers online, and we're getting on our phone and ordering flowers. This is the sort of videos you would see 10 years ago of the future of smartphone technologies. It was all about the hardware form factor, and it was about consumption. What we didn't see coming was content creation. This has exploded through the use of smartphones. You know, we see things like Vine and Instagram and other technologies, YouTube, people sharing huge amounts of content. We just didn't anticipate this 10 years ago when we saw these predictions of the future. This is something really interesting. This is something different. Because this has had a profound impact on the architecture of the internet and the way we use the internet. By 2017, 2/3 of all data that passes across mobile networks will be video. And probably 10% of that's still going to be selfies, right? But we pass this immense amount of data. Now, this has created some really interesting outlier things that we didn't anticipate. For example, about 10% of all photos in existence were taken in the last 60 days. That's a pretty incredible statistic, isn't it? Because we've got this exponential increase in the use of the smartphone as a video and content creation platform. But it's also created some astounding data facts. In 2008, we anticipated we would do about 1 zettabyte of content across the internet. This year, we're going to do 9 zettabytes of content. Does that sound like a lot of data? You know what a zettabyte is? You got gigabyte, terabyte. What comes after that? Petabyte, exabyte, and then zettabyte, right? Don't worry, you don't have to remember this. I'm not going to test you on this later, right? After zettabyte comes a yottabyte, named after Yoda, the character out of Star Wars. But anyway, let's get focused. So 9 zettabytes of content. That's 9 times what we estimated back in 2008 because we didn't see the content creation element coming. Now, to put this in perspective, 9 zettabytes of content, how much is that? If you take every book, every magazine, every newspaper we've ever printed throughout history, we generate that same amount of content today 200,000 times every second of every day. That's incredible. We didn't see that coming. Now, we thought the internet would create an explosion of content and data, but we thought it would be about consumption, not about sharing. This is where our lives have changed with social and so forth. It's created stars like this. This is PewDiePie. Now, I'm sure many of you have heard of PewDiePie. He is the #1 YouTube blogger on the planet today. As you can see, he has 5 billion views on his YouTube channel. He gets 300 million views a month. Now, to put that in perspective, he does about the same amount of traffic in 3 months that we got for the entire World Cup this year, 1 billion views. He does that in 3 months, and he does it over and over and over again. Incredible. To put this in perspective, if you take the likes of CNN or Justin Bieber and Miley Cyrus, they're not even close to PewDiePie. He does twice the traffic of Miley Cyrus and Justin Bieber combined, and he does 20 times the traffic of CNN. CNN has a budget of $860 million a year to produce their news network. My guess is PewDiePie probably has a slightly lower budget than CNN. So we didn't see this coming. We didn't see this element of these new stars. Back when I was growing up at high school and when I first started working, MTV was where the stars came from, right? Now it's things like YouTube and Vine, these sorts of things. This is a Viner. Her name is Lauren Giraldo. And she gets paid $25,000 to produce a 6-second Vine video. That's pretty incredible. Why? In the category of 13 to 17-year-old teenage girls, she is 50 times more influential for purchase decisions than Vogue magazine. She's 25 times more powerful as a brand for purchase decision in that age bracket than Victoria's Secret. Now do you know why she gets paid $25,000 to do a 6-second video? So here's the question. With people like PewDiePie and Lauren Giraldo, how do brands get influence today? Well, it's not through traditional media. It's not through advertising on television or newspaper or billboards anymore. These things just aren't working to create influence and awareness anymore. How do you get someone like Lauren Giraldo or PewDiePie to talk about banking and finance? You probably can't. So that's a real issue for us as bankers. How are we going to capture the interest of this new generation? You see, the generation of the baby boomers, the Gen X, they're the touch and the feel generation. We saw in the last presentation a lot of discussion about the branch. Okay? But we used to feel like it's not real unless there was bricks and mortar. It's not real unless we could go down to that store and try on those clothes and those shoes. I'm never going to buy shoes off the internet. But the Gen Ys, the millennials, they're the see and the hear generation. Unless they've seen it on YouTube and heard about it through social networks, the brand is not relevant. The influence has shifted. We didn't see that coming. So what about when we think about banking? Well, we have to put this in context. You see, when we think about what happens next, the smartphone is just the start. We've got a whole stream of consciousness that's coming. Data elements and real-time contextuality that's coming through smart devices like smartphones and so forth, that's further going to change the way we think about brands, the way we're influenced, the way we share, the way we connect. The smartphone was just the start. In fact, when we look at things like Google Glass and the Google contact lens coming in the future, we understand that actually this is more about our world being augmented. This data is starting to inform us in different ways. In fact, that data is starting to look a lot like advice, something that can help us make decisions day to day. It's no longer about interactivity or usability. It's now becoming about how we perceive the world and how this changes our thinking. Let me illustrate the element of how this data is incredible in terms of its capability. This device here is called a vessel. You can see it. It's a startup based out of US right now. You can pour a drink into this cup, and it will tell you what is the drink inside your cup. And it will tell you how many calories that drink has. It can even differentiate between different types of Starbucks coffee. And the device on the right is called a SIO. This is a spectrometer. You link it with your smartphone, with your Android or your iOS smartphone, and you wave it over the meal in front of you, and it will tell you how many calories are in the meal that you're about to eat. Now, this is changing the way we perceive the world, these sensors and data. But it's more than that. We're going to be capturing this information and starting to apply it to ourselves personally. Let me illustrate this unique shift. This fridge here is a smart fridge. It's so smart that it can tell what is being stored in the fridge and recommend the healthiest recipe you can make from the remaining ingredients you've got in the fridge. Now, this is intelligence, but it's also advice. So these things around us are no longer just giving us data, they're giving us awareness, they're giving us advice. And in the past, we used to think that in respect to finance and banking, that you needed to see someone face to face to get advice. And that a human was always going to be better at giving you advice than a computer. But this is changing the dynamic. Let me illustrate it. In Japan at the moment, in fact, worldwide, there is a Japanese pop star. Some of you may have heard of her. Her name is Miku, Hatsune Miku. Miku is a Japanese word for future. And Miku has come to the fore recently, in recent times in Japan, through crowd-sharing technology. Basically, something a little different about this pop star. She's opening for Lady Gaga right now in the United States, so she must be pretty popular, right? But you'll notice there's something a little bit different about Miku. Let me show you a quick video of one of her concerts, performances. So you might notice something a little different about Miku. She's an avatar. Or technically, we call her a Vocaloid. Why? She was developed as initially a piece of voice synthesis software. So when you went to karaoke and sang, you could change the sound of your voice. You could make it sound like a robot or like Miku. But Miku was so popular that within 6 weeks of release of this software, over 10,000 songs had been crowdsourced out on the web. Now, then bands like Supercell and others started to record singles with Miku's voice, and they went to #1. Suddenly they had albums that had gone to #1. And now she's performing all around the world as this avatar. She's performed in New York, in San Francisco, in Washington, in Toronto, in Paris, in Hong Kong. She's not a Japanese phenomenon now, she's a global phenomenon. She's opening for Lady Gaga. Now, at this concert in Sapporo, there's 40,000 kids at this concert, dancing along, rocking out to Miku. I want you to think about this. Think about the millennials who will go to see this concert, that are influenced by this brand. Do you really think that kids who will go and see an avatar perform a concert will prefer to see a person in a bank branch? Really? Behavior's changing, right? You see, often when we think about the problem of banking, we apply what we know of banking in the past, historically, to the future. But we didn't see this behavior change coming. So how's it going to map out for us? Well, first of all, the biggest problem we have today is paper, application forms, signature cards. Why? Well, not least because a quarter of kids coming out of university today don't have a signature. When you ask them to sign, they write their name. But the biggest problem is this. A paper application form is part of the analog world. It's not part of the digital world. It doesn't translate to the digital. It doesn't produce improvements in interactivity. You can't just take an application form from a branch and put it in a mobile app because that's not usable. That's not user-friendly. So we have to rethink design. But here's the problem. Banks are so attached to this. They think that a signature on a piece of paper reduces risk for the bank. Right? Guess what? They're wrong. They're very wrong. Do you know why? Because today, the amount of data we can throw at the problem of identity management and understanding a customer means today, if a bank is still using a paper application form, they're absorbing risk instead of mitigating risk. Now, that's pretty mind-blowing, isn't it? It's risky to do paper now for a bank because you just can't get as much information as I can learn about you in terms of your profile on the web and on LinkedIn and your behavior you do with your mobile phone and how you pay for things. All of that data is part of your identity today, not just a few data points you're going to put on an application form. It doesn't really tell me about risk anymore. This is the biggest process problem that banks have, and it's hard for them to change this. Even here in Brazil, you still have to go into a bank branch to open a bank account, right? This is broken, fundamentally broken. But it's more about behavior. See, in the past, in the old days when we had these passbooks for banking, you had a very clear a picture of your savings. You could go into the bank, you knew exactly how much money you had in your passbook, you could give that to someone over the teller, they would give you some cash back, you knew exactly how much money you could spend, because when you ran out of money, you just didn't spend anymore, right? So you had absolute awareness of your financial health. But when credit cards came along, banks designed credit cards so that you didn't know how much you were spending. And you'd max out your credit card and you'd go to a store and you'd swipe the card and it's declined, you know. Oh, I didn't realize I'd spent so much money this month. See, that was by design because banks realized that to get you to make money out of credit cards, they had to get you spending. So they tried to encourage you to spend. How did they do that? We'll give you rewards for spending. We'll give you free airline miles. So what's happened in the last 30 years is we've reduced awareness of our own financial health. I mean, think about what's the number one question that you have for your bank about your banking relationship? Well, the number one requested piece of information from a bank today is simply, what's my account balance, right? This doesn't tell you your account balance. All it can tell you is yes or no, approved or declined. It's a dumb instrument. In today's world, with our expectation of data and context, it no longer works. But guess what? This can tell you your balance before a transaction, after a transaction. So already that's going to be an improvement. We thought when the mobile came along, we thought it was about putting a plastic card in the phone. Now, with respect to Google Wallet, it's a great product, but it's not just about making your phone pay or pretending to be a card. We also thought it was about fitting internet banking on a smaller screen. We were wrong. It's really not about those two things. Why? Because this device is contextual. We carry it around. It's personal. So what we've learned since then is it's about engagement. It's about context. It's about the ability to give you information in the moment that's going to help you make a financial decision. The most important thing a smartphone can do for a banking customer today is tell them one simple thing. Can I afford to buy this? If you could answer that question, if you're in an Apple store looking at an iPad or the new iPhone, you should be able to look up your banking app and determine whether or not you could afford to buy this. And if you can't afford to buy it today because your rent comes out next Tuesday, maybe there's another option available to you. That's what we've missed with this whole revolution around smartphones, but we're starting to get it now. So the number one challenge today is potentially not getting people to adopt mobile. We see smartphone adoption is going through the roof. The number one challenge for banks is getting their app on your phone. About 60% of smartphone customers today in the United States don't download a new app in a 30-day period. So this is a challenge today. First challenge is getting the app on the phone. The second challenge is getting people to use the app. Now, here's the difference. This is the app that we've built out in New York called Movin'. I guess some of you guys have heard of this. When you use your phone, you go into a store, you tap with your phone, and you get a receipt in real time to the phone, which not only tells you how much you've spent at this merchant, but instantly categorizes it. So if you're at Starbucks, it'll categorize it as dining out or eating out. If you're in a clothing store, it'll categorize it as shopping. Instantly, you can find out how much you're spending. Now, for me, the first time I started using Movin', I live in New York, and when I get up in the morning, I walk out on the New York streets, and there's about 4 blocks to my subway station to get into the office. And then at the other end, another 3-block walk. They have these little yellow cars that go past in New York, called taxis, right? So I'm thinking, I'll just grab a taxi. Now, if you asked me how much I spent on taxis before I had this, I would have estimated maybe $200 or $300 a month. Imagine my surprise the first month I used Movin' when I found out I was spending $600 a month on taxis. So immediately, the awareness of seeing this coming on my phone in real time changed my behavior. And it's different to seeing it on a graph or a pie chart, how much you've spent. You're in the taxi, you pay for the taxi, and then you see exactly how much you've spent already on taxis this month. There's a very interesting psychology to that. So it changes behavior. And this is the thing about mobile. Mobile's contextual. It gives us that ability to see and learn as we go. Now, what's going to happen with the branches? Well, in the past, when we talked about the future, we talked about branches of the future. You'll see banks talk a lot about branches of the future. There's entire companies, consulting companies, built around helping banks build the branches of the future. But you never hear anyone talking about restaurants of the future or coffee shops of the future, because it's different. It's about relationship. It's about context. Actually, in the future, because we're going to be so engaged, we're going to be using our mobile phone for banking 3, 4, 5 times a day. You would never use a bank branch 3 times a day for banking. So this is going to be the relationship channel. This is going to be where you engage. This is where revenue will be driven from. The only time you'll go into a branch in 5 years' time is if this doesn't work. Now, a lot of banks say, yeah, but what about complex products? You need to speak to someone about complex products. But this is where the smartphone is pushing us towards simplicity. Complex products aren't valuable. They don't work well on an engagement basis. They don't work well on a contextual basis. So while there'll be some investment class products and so forth that people will still go into branches for, the majority of customers just won't need to go into a branch unless their digital relationship is not working. There's a psychology to this, right? We need to have some branches around. What happens if you can't get your money? You have to go and scream at someone until you get your money. There is this psychology. But this does mean that the branches that we will see in the future will be a lot smaller because they won't need to be about transactions. They won't even be about selling necessarily. They'll be about servicing the relationship of the customer that started in digital. I want you to think about it this way. When the Kindle emerged in 2008, it only took 3-4 years before people, the majority of people, were downloading their books instead of buying a physical book in a bookstore. So the instinct for buying a book had fundamentally changed. We're not going to go back to a time when people prefer to go to a bookstore to buy a physical book. That's the past. The same thing with iTunes and Spotify. When this came along, it changed our instinct for buying music. We no longer thought about going to a music store to buy music. Now we just download it or we listen to the stream. What happens when you can download your bank account to your smartphone? Well, the same thing. Our instinct for banking is going to be all about this and not about that. It's an interesting shift. Now, context becomes key. See, banking is really, when we think about things like getting a mortgage or getting a car loan or getting a credit card, banks think that these are distinct product experiences that the bank owns, but they don't. See, I don't buy a mortgage, I buy a home. I don't buy a car loan, I buy a car. I don't buy a credit card, I go shopping or I travel. And this is the way context is going to fundamentally change the way banking fits in our life. Because 5 to 7 minutes after you walk in this car dealership, you'll then get a pre-approved message on your phone telling you how much you're pre-approved for a car loan or a lease. That is much better than saying, I'm sorry, we're not sure whether we're going to lend you the money for this car. Why don't you come in the branch on Monday, sit down, give us all of your information, and maybe if you're lucky, we might let you be our customer, which is the way the process works today. You see, the great thing about context is it's going to simplify the way we think about banking. Banking is going to be embedded in our life. It's not going to be a place we go. It's something we do as we go about our life. And the best banks will enable this context. That's a big shift. And we didn't see that coming when the smartphone came along. We thought it was about putting a card in the phone or putting internet banking on a smaller screen. We didn't understand it was going to be about the very relationship we have with our customers. This is exciting. So how's this going to change banking? Well, I thought I'd finish off with this. The future of banking is going to be quite different. And this is going to change the way not only we think about banking, but even the jobs, even who we call a banker. Now, in the past, which of these would you have identified as the banker? The guy in the suit, right? This guy looks like a banker, yeah? Well, in the future, we're not going to want bankers like that. We're going to want different skills. These are the top 5 jobs that are going to emerge in banking over the next 5 years. The first is a data scientist. Now, Google, I think, is responsible for this term data scientist. We used to call them statisticians previously, right? But now they code and they look at data. We call them data scientists. This is going to be the #1 in-demand job for banking. Why? We have so much data in banking that we just don't do anything with today. Payments data, behavioral data, information about our customers. What do we do when you want a new product from a bank? We collect all of that data again on an application form, right? We ask you for it all over again. We're not very good at using data, but to get context, we're going to have to understand customers and anticipate their needs and fill their needs in real time. This is the shift. So data scientists. Second, experience designers. Or maybe we might call these guys storytellers. The ability to understand where banking fits in your life, where it will have the most impact, and message you at that time. And this is where it's interesting. In the past, this recent time in terms of smartphones, we've been very focused on the app. But the really important thing here is that when we look at experiences and context, the notification and messaging layer and the ability to stream HTML5 experiences to the customer in real time is going to emerge as much more important than just the app. But if you don't have the app on the phone, you don't have the ability to stream experiences. So that's like, putting the branch in the community. Today, if you don't have that app on the phone, you're going to be in trouble for revenue generation and experiences later. Number 3, behavioral psychologist. Why would we have a psychologist in banking? Well, you think about money, there's a lot of things in money that are about psychology. How we use it, our behavior, even just the way we communicate with this with different customers. If there's some customers who will be happy if their phone tells them, no, you can't buy that iPad. There's other customers who will say, who are you to tell me I can buy this iPad or not? So there's different tone, there's different language that we may have to use for different customers. Understanding the psychology of money, the psychology of a decision is going to be important. Algorithmic risk specialists. These are basically programmers that can build in compliance and risk into the system. In the past, these would be people sitting in the process that would tick the box. In the future, it's all going to be built into the actual application and relationship process. And finally, fairly obviously, community builders. Really understanding how influence is created and tapping into those spheres of influence to get your relationship started with the bank. That's going to be important. So we didn't see a lot of this stuff coming. In fact, bankers are still hiring people that can help them with branches or risk officers that help them build better application forms. This is broken. We have to think fundamentally different about engagement and behavior. This is the future. So, I want to just share with you guys, my latest book, Breaking Banks, is out. If you haven't had a chance to read it, you can use a QR code to download a free chapter today. And if you want, you can keep up with Breaking Banks. We have a radio show that goes out to 72 countries. We have listeners from Brazil here. If you just look at breakingbanks.com, you'll see the radio show. We go out weekly, every week. We're now the largest fintech radio show in the world. So we have over 100,000 listeners to the show. And we go out on the AM band in New York and on Voice America. But you can find the details of the radio show on Breaking Banks. So if you're interested in disruption in banking, we interview all the different players from around the world. In 2 weeks' time, we have the team from IBM Watson, who is working on machine intelligence, and the author of a book called Our Final Invention, talking about artificial intelligence, talking about how this is going to change the way we interact with banks, with machine intelligence. So be happy for you to follow that, but thank you very much for the opportunity to meet with you guys today.